now it's time for our weekly energy update with Dan McTeague, president of Canadians for Affordable Energy. Take it away, Dan.
Well, thanks for that, Nima. Again, a very unusual week in gasoline and energy prices. It doesn't seem that you can make long-term predictions without something happening or a news headline gripping the attention of traders. By traders, by the way, we've talked about this many times. These are not physical traders of oil, gas, propane, diesel, natural gas, jet fuel, whatever you want. These are speculators who are on the periphery, on the margin, and they look at things that are not really relevant to the importance of economics of energy. They don't look at fundamentals like supply and demand. And for that reason, you saw a tightening of supply in the United States. Oil inventories dropped by about 6 million barrels, putting it down to levels that are well below the average for this time of year. And you also saw a surge in demand, a continuing surge in demand, and that has been completely ignored because some are concerned about less than impressive numbers coming out of China economically. Even though China is now reaching record levels of demand for oil, and in fact had to reach into their own strategic petroleum reserve to ensure that the market was adequately supplied. Then there's always the bedeviling question of which way the U.S. Fed and central banks are going to go on inflation, and banks themselves. So the liquidity and the concern about the stability of some U.S. banks. Anytime these things happen, it seems the market is zero focused on the irrelevant while completely ignoring the relevant. For that reason, we saw a bit of a dip in prices at the end of this week. Not everywhere, but certainly across much of Canada, we saw prices move up to the about $1.72 average and then drop back down to what it is today, towards $1.68. And that is likely to be the story of next week as we see prices perhaps tapering off a little bit until, again, reality clubs this market over the head. So let's start with Vancouver. Certainly an outlier, seeing prices move from the 203 range all the way up to Saturday to 209.9, so just a fraction under 210. It's likely to stay there, if not go higher, 3 or 4 cents a liter. Same for Victoria. For the rest of British Columbia, because its market is tied to Alberta, Saskatchewan, Manitoba, and Northwest Ontario, really determined by the spot market in Chicago, I would expect prices to drop 2 to 3 more cents a liter by the end of next week, while Ontario will continue to see prices that are range bound because they, like Quebec and Atlantic Canada, the price is determined on the New York Mercantile Exchange. Look for gasoline still in the final weeks of this month to continue to be up one day and down the next. But I think at the end of the week, we're still looking at about a net 2 cent a liter increase. What that means is that Ontario, Toronto, Ottawa, London, Windsor, Niagara, those places will all see about $1.70 remaining the number that we see for the balance of the week, while Quebec will continue usually about 12 cents a liter above that, whether that's the Gatineau, Outaouais region, or where that happens to be Montreal or Quebec City itself. Quebec City being a little higher. Obviously, margins are very good for gas stations, but remaining in the $1.82 to $1.85 range, possibly with an increase of about 2 cents a liter. Atlantic Canada saw some pretty big increases this week. In the case of New Brunswick, Nova Scotia, and PEI, up 2 cents a liter, as we said would be the case last week. Diesel was up 3 cents a liter, while Newfoundland saw almost 6 cent, just a little over a 6 cent increase, getting a lot closer to that $2 a liter range. That's about as high as it's going to be for the next couple of weeks. We could actually see that moving back down maybe 4 or 5 cents a liter, especially as we head towards the middle of September, when we change the spec for gasoline from summer blends, which are more expensive to make, to winter blends. Nima, I've had a lot of people ask me what is the difference, and there are two components. In the summer, you use alkylates. That's a market. It's very expensive. You use it to boost octane, very much a property used in premium. In the winter, we use butane. Butane because it ignites much quicker in colder weather, something you want to help start the engine, but you don't want that have that kind of volatile property in the summer when it's nice and warm. So that's the main reasons between the differences that we see between summer and winter gasoline. We also see demand trail off a little bit, but as I mentioned, for Eastern Canada and Eastern Seaboard U.S., watch out for the two refineries, the St. John Irving refinery and the Delta Airlines Monroe refinery, closing down for about a month from September 15th to October 15th. And let's keep an eye on the U.S. Gulf Coast, It looks like some storm activity could have a much greater impact this time next week. We'll talk to you then, Nima. I'll see you in 7 short days.
And that was Dan McTeague with our weekly energy update.